Welcome everyone, thank you for joining me. We might just get underway here, so I'll do a quick sound check into the room and we'll start. So if you could just let me know that if you can hear the volume, or the volume's good, sorry, and also you should be able to see the disclaimer on the screen as well. So we'll just do a quick sound check. Testing 1 2 1 2. Fantastic, great. All right, guys. So what we'll do is we'll get underway, and as I mentioned before, today is really going to be a review of the process. So the process that we want to go through when we're obviously looking at our systems. I'm going to talk about our top 10 systems. I'm going to talk about how we get to our top 10 strategies. We're going to have a look at reviewing systems that are really good, but they've got to be good for our portfolio, because really the goal for us as traders is to obviously construct a multi-system process. So it's not just about one system. It's never really going to ever be about one system, one strategy. It's always going to be about the ability to trade multiple systems and build a portfolio of systems that are able to make money and profit in ever-changing market conditions. And that's really the key you'll find today, is that it's about creating a system or systems and then being able to apply those systems obviously in different market conditions. So we're going to kind of do a bit of a review of how that all works, and I'm going to take you through the strategies that have been working really well, and we'll have a little bit more of a look at the Viper as well. So guys, let's get underway. Now remember that the key for our pro traders obviously is, if we're going to delve into creating a strategy or putting a strategy into a market that we want to trade, the most important thing for us is we need to understand market profile, the profile of the market, and that comes down to having a really good understanding of obviously your market knowledge. So if you're going to jump into a market like the S&P, the Euro Yen, crude, it doesn't really matter, gold, you need to be aware of what time of the day that market trades, when the volume is best, where the spread is the best, where the movement and the volatility is going to be in your favor depending on the system and strategy you're trading. So that all those little things require research, analysis, and they require you to do some time and watching that market and analyzing that market before you jump in and start trading it. Because one of the keys obviously for your success going forward is to not only obviously build a multi-system strategy, but have a good idea of what's happening with your market, and it comes back to, again, tracking your market conditions. So you don't want to go into a market where you've basically spent no time, you're not sure about the volatility, you don't know what the current conditions are. So when we talk about putting together our market profile, it's more than just doing a little bit of research and submitting a report on the markets you're going to be trading. It's also about knowing when the market's best to trade, and also too, knowing what conditions are currently happening or what conditions are in play in the market. Because one of the things that can happen very quickly with strategies, as we've all seen, is that you can create a great strategy that works really well in a trending market or a fairly volatile market, and then suddenly those conditions change very quickly, and that can have a massive impact on the settings that you've put together for your strategy. So it's important that we're aware of that, and we kind of take that into consideration. Now, for those, there's a couple of new people in the room, so my apologies. I'm used to just kind of running through and with the guys, because they all know me. It's Shane Fry, obviously I'm the Director of Coaching and System Development. So as I said, I'll be taking you through our update today. And the key for us today, as I said before, is to just start putting kind of more framework around what we're looking to do here, and explaining kind of what's really working really well at the moment and what needs to be reviewed. So coming back to what I was mentioning before, the key for us, for our group, when you go forward and as you go through the program, obviously you're seeing this yourself, is it's looking at a multi-system approach. So we just don't want a one system. We're not going to be a one system trader. We want a multi-system approach to take care of those multiple market conditions. That multi-system approach might include multiple timeframes. Now, if I'm trading multiple timeframes, it means that potentially I've got the ability to potentially trade intraday, hold longer term positions as a swing trading position, or I can add or apply multiple contracts to my positions if I'm getting in at multiple time frames as well. So there's different ways we can measure, obviously, and apply our portfolio based on multiple time frames. The other thing we do with our strategies, we've got that multiple time frame filter too. So it might be applying a setup but looking at multiple timeframes to confirm your entry. Multiple markets is the key as well. I wouldn't suggest being across lots of different markets when you first start. Obviously, when we go through the program, and most of you will attest to this, you really want to stick to one market initially, maybe two, just to build your experience and expertise, then start building on that. It's like anything we do. We want to kind of get competent in one or two systems to start off with, and then once we see that competence come to fruition, we want to kind of build our competence base, and we want to build our market base. So then we're spreading our risk and building our systems up and building our markets up, because that's really the key. Multiple markets, multiple timeframes. Now, my question to the group here. Now, there will be a few questions in the session. What would you say would be, if you've got, what's more important, a correlated market? What do you have to be more concerned with, a correlated market or a correlated systems? So if I'm trading two systems and they're trading on two different markets, but those two markets are highly correlated and my systems are not correlated, should I be concerned about that? So if I'm trading at, say, a trend and cycle, and I'm trading them on two very correlated markets, say the Euro USD and the Pound USD, should I be concerned about this, or should I be concerned about system correlation or market correlation? Because we talk about it when you've done, if you've done any work in the currencies, the big thing with the currency markets, also the futures market, is make sure that your markets that you're trading are non-correlated. Now, that more applies to really if you're trading a very similar strategy. So if I had the trend trader, so if I had a trending strategy and I'm applying that to, say, for example, the, let me just double check that everybody's, if I had the trend trader and I'm applying that to, say, for example, the Pound US dollar and Euro US dollar, then I've got a highly correlated market, haven't I? Highly correlated markets, and I've probably got a highly correlated system as well, because they're both trending systems. They're possibly taking very similar entries. So you really want two different markets, and you can trade two different systems on the same market. So that's really the gold, and that's what we're going to kind of explore today. We're going to look at, right, well, what really are we looking for with our portfolio? If we're looking at our portfolio of strategies, what's our most important aspect? Excuse me. It's got the hiccups, so I'll just go back to that. So let's jump through. So top 10 results. So let's have a look at some results here. Comments coming through. Two different systems on the same market is okay, as long as they are trading off different conditions with good risk management. That's from Derek. Or better to have complete uncorrelated with markets to be diverse of risk. Yeah, it's the best. The absolute best approach would be obviously multiple markets, multiple systems, multiple time frames. There's a number of ways you can kind of manage your risk across systems, but the most important thing, and you're going to see this here with the results here for a second, we really want to have systems that, and when we talk about correlation, we're talking about drawdown risk, aren't we? That's really what we're looking at. We're looking at, right, which systems have got the closest drawdown risk of the strategies we're trading. So if I grab our PME, our Portfolio Manager Elite, now some of you use the PME spreadsheet, some of you use obviously TradeStation mandate calculator. This is, for those of you who are unfamiliar with our spreadsheet, this is a spreadsheet where we're tracking our trades. So every time we get a trade in TradeStation, so if I produce a trade report, which I will here in a second, so this is a report on the Viper strategy. This is the morning session. Crude 175 tick, and if I look at my trade list, now any time I make a change to my system, any change, say for example I go in and I decide, right, well, I'm trading this strategy, it's trading the morning session, I want to change, because the market conditions have slightly changed, things have gotten a little bit more volatile on crude, as we know. What I'm going to do is I'm going to jump in and I'm going to change the stop. So I can change my stop in here in my strategy, and I can make that, say, instead of a 9-point stop, I could push that out to 15 points, $150, 10 points per contract on crude. Now, if I do that, what's going to happen to all of that data that I have here in my trade list? What's going to happen with my trade list data? At the moment, it's that's exactly how the system's trading. They're the trades it's taken. Yeah, it's going to change it. So I've basically lost everything I had. Particularly if I'm actually running this in my account, I want to capture that trade data. I don't want to have to basically copy down, like, manually all the trades that have come through in my brokerage statement. I want to copy that trade list, and then if there's any adjustment, I'll make it in my spreadsheet. So the reason why we run these spreadsheets is because if you make any change at all to your TradeStation strategy, it will change your complete results for the last 6 months or 12 months, depending on how much data you've loaded up. So we capture and drop the trade data into here. So then every week we're dropping our new data in. So if we do make a change, then it's only affecting the last, say, 5 trades or 10 trades, because we've captured all our trade data. So our spreadsheets are critical for tracking the performance of our systems. Now, what I'm going to do is I'm going to take you through some of the top 10 systems, and I'll give you a reason for some of these strategies. Now, there's probably, on reviewing some of our top 10, there's probably about 20, but I picked out some that have been doing really well, and others that I like. And also, what I wanted to do today was show you when we talk about putting systems together and correlation, one of the big things is that drawdown, and it's really about managing the drawdown based on your starting balance, and also making sure that you've got systems that are coming together that work well together. So let's have a look. Now, obviously, there's no surprises that coffee is the best performing system, which is the Trend Trader SN319. That is by far the best strategy we've got running on the systems. It's made over $70,000. I've got for this data I captured, it's got about 66k, but I know the total for coffee for the year has been about 75, so it's been huge. Now, the only trouble is, what can you see if you look at these strategies, and we're talking about ranking our systems, and we'll start with profit, and then we'll go back to a more important aspect that I think that we should be looking at, which is average trade net profit. So if you look at coffee, the coffee strategy, and remember that the benchmarks that we look for for ranking our systems are average trade net profit has to be above $50. The number of trading days, the more trading days we've got in there, the better, obviously, because it means that we've got a better data sample size. We want to make sure that we've got a good return on investment for the year based on the trading capital that we're using. Now, one of the things that you're going to have to kind of work out yourself as a trader is basically, is the win rate good enough for me as a trader, or do I need it to be, where do I need it to be comfortable? Remember that you're not manually, physically trading these strategies. They're being traded in automation, so that means that you're not physically putting these trades on, because I think you probably would struggle with a 25 to 30% win rate. This is at 39, so it's almost up to 40. Now, you can see there that it's hitting our benchmark stats. The ratio of profit to max drawdown 8.5, which is great. That's fantastic. But the key here is that the average trade net profit is at 203. That's what I really wanted to see when I'm ranking my strategies, I wanted to see a really good average trade net profit for the systems. And you'll see that one of the strategies is really struggling with average trade net profit. But for this one here, coffee, it's sitting up nicely, 66k. So if you're adding that to your portfolio, if you're looking at a system to add to your portfolio, that definitely would be one that that is going to give you that great, obviously, overall profit. But what's the downside to that strategy? What would be the downside to adding a system like that to your portfolio? The potential downside. It's got a huge drawdown. So what I'm going to show you here is I'm going to turn every single system on here except for, obviously I haven't got anything in system 10 or 11. But if I turn coffee and copper off and soybeans, you're going to see that my drawdown is about 2. If I'm trading the remaining strategy, so SN312, B44, F66, soybeans, Eurobond, gold, or the 2 gold strategies, my drawdown for those systems is $2,800. That's pretty good. Like, it's an $83,000 profit. The net profit to max drawdown is 29.5. That is huge. So when we start putting our systems together and start looking at it as a portfolio, you can see the huge value of having systems that are uncorrelated, because they are uncorrelated, because some of the drawdowns on these strategies here are greater than 28.69. So if we look at the remaining systems and drawdowns, you've got where are we? 28.13. The soybean strategy there alone is 28.13. So if we were, say for example, just starting out trading one strategy, we could only pick one system, and we decided, right, well, I really like the cycle trader, it's tracking well, and we started trading it, and then it went into a little bit of a drawdown. Well, obviously this has, because the average trade net profit on any strategy we load into our tracking has to be above $50. So this is in a current drawdown. Now, the trouble is that you started that strategy with 20 and your max drawdown is 2,800. So this is the disadvantage, obviously, of trading one system, one market, and then you're susceptible to obviously a system drawdown. Whereas if you're trading multiple systems, multiple markets, you're able to obviously take advantage of putting a number of strategies together. They're going to just smooth that equity curve out and reduce that drawdown. Now, the only trouble with that is that obviously to do that you need more capital, and that's obviously why we've got the Pro Trader program and the Emerging Managers platform, because we know the sweet spot for trading these multiple markets, multiple systems is around about 50 to 100k, ideally 100k, and then you're really kind of singing along because you've got your 10 systems running. So then if we go from trading the strategies we've got on there at the moment to adding, say, we've got 83k there. If we add in, let's see what happens when we add in coffee. Coffee takes it up to 149, so it's a massive increase, and our drawdown goes to 5,400. Then we add in copper. We drop. See what happens with copper. So copper and coffee are working well together. And we add in FTO9. FTO9 pushes it up. So is it worth, if we look at this from a risk management point of view, is it worth us adding in soybeans? Or would it be better for us? Because if we look at the soybean strategy, and that's C, soybeans has got $28,000 worth of profit. It's, if we have a look at soybeans here, its ratio of net profit to max drawdown is 5.2. Is soybeans worth, even though it's got a really good overall profit, is soybeans worth adding into our portfolio from a risk management point of view? Because what's our goal when we're trading? What's our ultimate goal for managing our portfolio? I mean, obviously, coffee is definitely worth adding in, because coffee's added $66,000 for a drawdown of around about 7. But then we've got soybeans that's been tracking really well, max drawdown of 5,419. Would you say that soybeans is worth, by adding $1,000 of risk to our portfolio for the 28k profit. Could we create a system that's better than the soybean strategy, that could have a smaller drawdown and actually improve our portfolio drawdown? Because remember, when you're looking at your portfolio, the goal is to not be building. It's not really to be building your risk, your portfolio risk. It's really to be reducing it. So if I'm constructing my portfolio of my top 10 systems, now my tops, it's good to look at the top 10 systems because obviously we want to see what's available. But then when we start choosing the top 10 systems to go into our portfolio, because we're wanting to build this robust portfolio, what's our ultimate goal? Because remember, when we start adding systems together, our goal isn't to have our win rate at 70% or our drawdown, our overall profit at a certain value. It's to get this ratio of profit to max drawdown as high as possible, really, isn't it? So that means that our focus is to have systems that are complementing each other on the drawdown and adding profit to our account. So if I'm putting together a portfolio and I know that coffee's really where the overall profit's coming, like the great profit's coming from, I want strategies that are going to help coffee out, don't I? That's it. So Clyde's kind of nailed it here. So we want to minimize the depth of because we've got our peak to valley or our troughs in our equity. We've really got to get to a point where that drawdown value. If we look at our portfolio graph here, and I haven't loaded that one up yet, but let's go back to our system management tab. If we look at our cumulative profits here, we're wanting to reduce these drawdown periods. They're not huge, but anywhere where there's a bit of a dip in equity, that's what we want to reduce, because that improves your obviously your overall performance. If you've got investors, whether it's through the Pro Trader program and you're managing, you're on the Emerging Managers platform, then you've got obviously one investor. You still want to manage the investors' expectations, like Clyde said there, and it's creating that expectation where you as the manager are able to facilitate a portfolio that has very minimal drawdown based on your ability to put good systems together that reduce drawdown. So really what you're doing is you're targeting, once you get a really high performing system or a system that's turning over good profit, you're targeting that drawdown. So you might find that, well, I might have a system that has a $66,000 profit, and then I add in, because what happens if we add in soybeans here, yeah, we increase our profit, but we also jump our risk up as well. So it's all about, in relative terms, it's all about making sure that now there's a realistic number that we can get this to. Obviously, the more profit we're bringing in, the more potential we've got of obviously exposing our potential drawdown. But it's that balancing act, balancing between overall profit and max drawdown. So really, your job or your goal for your portfolio, if you're loading your systems up in the mandate calculator and you're looking at your systems as far as overall performance, you really want to be picking some strategies that you're looking for or looking to reduce that overall kind of max drawdown. So that was one thing we wanted to cover today. Now, if we have a look at our systems over the last 12 months, you can see coffee's been tracking beautifully. Soybeans, yeah, and Clyde's just made a comment in the room here. The intraday systems can be a massive advantage. Like if you have a look at the systems we've got here, some are trend, some are taking far less trades like gold, SN 380, 91 trades. We've got 33 trades, sorry, not 91, the number of trades there, 264, but some are taking far less. We've got 147 on B44. B44, which is the breakout strategy, is not trading a lot. 147 trades in a year. That's not a huge number, but it's tracking beautifully. Max drawdown 570. Sorry, that's number of traded days. 69 trades. I'll get it right here. 69 trades for the year. The drawdown here on this chart, this is why I've kind of selected B44. If we have a look at the across the board B44, it's not really jumping out with massive profit, is it? It's not really an intraday strategy, but it's more a swing trading strategy. And you're not going to get, if you're looking to apply a strategy that's going to run, say, over 12 months and it's only taking 1 or 2 trades a week, you're not going to get a huge volume of trades. But the value of having an intraday strategy running with this gold one is huge, because you've got 69 trades here on B44, but if we go to B77, we've got 77 trades. Then you've got a massive 218 on SN380 with a $19,000 profit. So there's the balance. This is where we talk about, and we've spoken about this in the room before, having a capital growth strategy and having a high turnover strategy. The high turnover strategy is more your intraday higher frequency trading system. Still maintains that average trade net profit of over $50, but also too allows you to get to that next level of money management, that next level of rate of increase on your money management or your portfolio. Whereas the capital growth strategy does what? What's your goal for your capital growth strategy? And this is why the balance of the two is fantastic, and I think that's the point you're trying to make as well, Clyde. With the intraday swing trading strategy, you can almost be hedged if you're trading multiple systems in one market. You can almost be hedged in a way that you might say, for example, be long on the S&P, and suddenly you've got a little bit of volatility intraday, which we see a lot of the time, and you'll get that quick short sell-off, and you might be short on your intraday strategy, but long term you've got a swing trading long focus on your S&P. So that helps, and with the capital growth strategy, the goal is to get those bigger trades, those bigger yielding profitable trades that are going to really boost up your portfolio. And you might have a couple of smaller losers, but with a capital growth strategy, this one's running B44 with 69 trades, running at 51% is pretty good for a breakout strategy. Typically, you see those tracking at around about maybe 30 to 40%, so 51 is very good. And obviously the Eurobond, the advantage with the Eurobond there is we've got a much bigger market that we're looking to trade. So that's a huge advantage. So as I said before, you want to make sure that if you are, when you're putting your portfolio together, you definitely want to have the ability to put in a swing trading or a capital growth strategy, as well as those shorter term intraday systems as well. So breakout, the SN380s, that's the F swing, and the breakout kind of both can be used intraday, but this one's used more as a swing trading strategy, B44. That's loaded up to the top 10 portfolio folder. So, and just to give you a kind of a look at where that is, if we go into our top 10 systems here, I've just added in to I'm going to be adding in some more today as well. Just did an all systems top 10 review, 20th of October. I'll make sure that everyone's got access to that Dropbox folder, and that just gives you a kind of a look at some of the systems we've been reviewing, and obviously B44 features quite prominently in there, as well as B10, so there's a few strategies there. Now let's have a look at, both of those systems are breakout strategies, one at 49, one at 51. The drawdowns are quite different. You've got 570, that's the gold strategy, 1280, and then you've got the Eurobond at 570. Now, as I mentioned before, the profit there on the Eurobond 7,750, on gold on that breakout strategy is 1390. So that's trading slightly more and you'd probably expect that based on the volatility on gold. So as I mentioned before, the reason why that strategy is kind of sitting in my top 10, the Eurobond 44 breakout, is purely because of the ratio of profit to max drawdown. So if I add that system to my portfolio, there's a high likelihood, regardless of where I put it in with what systems, it's not going to make a huge difference on the drawdown. So systems like that are very, very handy if you can have something that's got a very low drawdown and add in. You're just really just adding in 7K's worth of profit. You'll find that it's not going to really impact on drawdown significantly on any portfolio. So, and the likelihood of that $570, that drawdown occurring exactly the same time in other markets or other systems is very unlikely. So we've got, as I said before, average trade net profit of 112 and overall profit of 750. So that to me, that's like just giving $7,000 of profit to our portfolio, and that's exactly what we want. So the other ones that kind of look really good for me that would feature in the top 10 would be this crude strategy at 59%, drawdown $900 ratio. So what's the theme that you're picking up here with the ratio profit to max drawdown? Like, I'm really kind of looking at strategies that have that really good ratio profit to max drawdown, because the larger that is, typically the larger the average trade net profit is as well. So you'll find that those strategies tend to push that average trade net profit up considerably. So question from Derek, is soybean something you replace due to the profits received 20k but increased to max drawdown of 1,000? I would probably, if this was my personal portfolio, I wouldn't probably have soybeans in there, or I would work on that strategy to try to get that. Because remember that if you're looking at a system and you're seeing that the drawdown, and we'll go to soybeans here. If you look at this system, it's a swing trading strategy, intraday swing. It doesn't trade. It does hold contracts overnight as well. 42% is good. The average trade net profit is really good at 212. So, and the profit overall is 28,000. So, could we reduce our max drawdown? We definitely could. We just need to do a bit of work to it. That strategy has been created, and it just means that if you want to trade that system, you might want to put some work into reducing the drawdown. So just because the system's loaded up into Dropbox and being traded, it doesn't mean that we can't work on it. Like, I personally think that if you like something, you like everything's stacking up for you as a strategy, you need to get in and really kind of work on the drawdown. And reworking the system, because all the hard work's been done. Like, realistically, this system's been trading well for, almost 12 months now. That's a lot of hard work being done. And when you've got systems that are tracking that don't require, like, really none of these systems here have been touched for about probably 2 to 3 months. So that to me means that either the market conditions haven't changed dramatically, or the systems are very, very robust, or a combination of both. So if you've got soybeans that's running a max drawdown of 4,500, you just may need to tweak it a little bit to get that down. And then you'll find if you can maintain the profit over that period as well, then you've got a great little strategy that you can run with. So just jumping back into our top 10 here. So the as I mentioned before, crude is running well. Max drawdown 900, very, very low. Ratio of profit to max drawdown 12.2. Average trade net profit is a massive $344. Now, anytime you see a system with an average trade net profit of over $300, straight away you know that you've got something that has got potential, really, really good potential, because you've got so much fat in the system. So what's one of the biggest things with crude oil, and this is what you're going to notice with the strategies we're putting out, because remember, if we go back to that presentation, our goal is our goal is really to get a situation where we're trading multiple systems. So for our group in the next, you've got the Viper strategy that we're going to have a quick look at today, and we've got the failed trend, the pivot trader, and the MACD trader, which is going to be coming out in the next 2 weeks. So the goal is really to create for us better and better systems that we can use in our portfolio. So we don't want to we want to have a top 10, but we want systems that have got this huge ratio of profit to max drawdown. And the systems that we're going to be creating moving forward as well to add to the systems we've already got, and you can see we've obviously got a lot of strategies. We want systems that have a huge overall profit to max drawdown and a huge risk to reward, or reward to risk, because that's where you're going to get that average trade net profit pushing up high. If you've got systems that have a 3-to-1, 5-to-1 reward to risk, then that's going to grow your account exponentially. You're going to always sit with a really good average trade net profit, and this is why crude F66 is really kind of cranking along beautifully. So any system that you load up and you're tracking and that maintains a good average trade net profit, you definitely want to add that into your portfolio, just purely because you know that when you turn it on, sim it or go live, you've got a very, very good chance of maintaining that overall performance, just purely because of the average trade net profit. So if we push on here, so that's one of the reasons why this gets definitely gets a Guernsey. And the reason why the average trade net profit, do you think, is why? What's the giveaway on this strategy that would tell you that, well, the reason why the average trade net profit is so high is because it's really not trading, it's not trading very much, is it? So it's a swing trading strategy. It means it's got a huge reward to risk, and that's why it's doing as well as it's doing. So anytime we've got that in our portfolio, we're definitely going to be adding, obviously, performance to our portfolio. So F81, the reason why I like F81, this is our trend strategy, 43%. Max drawdown is not huge, 22.62, 93 trades. I like it because the average trade net profit is 122, and I also like it because it's tracking well with that average trade net profit. But the only thing that we need to work on this a little bit more is that the profit ratio, the ratio of profit to max drawdown, that ideally could be higher. Ideally, what we want it at 6. So anytime you're running a strategy, and this has been running in real time now, and the trouble is that it started much higher. And the average trade net profit started higher, and it's just slowly. If you get a period where you're running a system, we'll go to F58. So we'll go to that Eurobond strategy, and it should be there. There it is there. If you get a system that you're running, and you get this flattened, this really drop in equity, that's going to do what to your performance? Your average trade net profit and your ratio of drawdown to max profit. It's going to really erode that profit. So this thing started really, really well and has just gone flat and then slightly down, had a drawdown. So you've just got to watch that as far as your portfolio. So just a question there from Derek. So for us as traders, average trade net profit is the key. Yeah, it is. And you're going to see whether you're trading, depending on what strategy you're trading, and you can see the profit over the last 20 days. It's really kind of been, pretty sluggish on this system. I've got this in because it's been tracking so well, but recently it's just dropped off. And this is an example, when you've got really, really good systems that have been doing really well, that have got a good average trade net profit, you've got to be careful that you keep an eye on the last 20 days. The last 20 days, the last 40 days, because if you've got a system that's been absolutely belting along, and a good example of that is coffee. If I show you our coffee strategy, which I'll bring over here in a second, coffee has been outstanding. As I mentioned before, there's our equity graph on coffee. it's been onwards and upwards. It's delivered some huge profit. The performance on this thing has been fantastic. But the trouble is when you're tracking a strategy like this with your data, you've got to be careful with the average trade net profit of $279 on coffee. It's going to take a bit of time for you to, if you're just tracking average trade net profit, for you to really make the connection between, right, well, particularly if you get a flat period and it's not making as much money, that average trade net profit may not be moving too much. So you definitely want to be tracking your weekly profit, obviously, as well. That's one of the keys, particularly if you've got multiple systems trading together. This is one of the downsides to trading multiple strategies. You can get, it's like, you can basically get complacent on the portfolio because you've got to be very diligent in tracking every single strategy, making sure that the profit's there and the performance is there on each individual strategy as part of your portfolio, because one weak link in the portfolio can really be hindering your overall portfolio performance. And that's why when we look at the spreadsheet here, and we'll go back to our spreadsheet, it's really critical to go through each strategy every week once you load your data in and look at those last 20 days and say, right, well, what is my requirement for this thing to be in the portfolio that I've selected, whether it's 2, 4, 6, 8, 10 systems. And if it does drop with below one of your benchmark might be for the last 20 days and needs to have an average trade net profit of over $50. Well, clearly, the last 20 days, this thing hasn't. It's been a great performer, but last 20 days has been very poor. It's working well on the long side, still not enough money. On the short side, it's really, going down. So this gives us, remember what we came back to talking about, that's it, time to bring on a new place kicker. That's a good point. When we spoke about this initially in their presentation, we said that you need to know about your market profile and you need to be tracking your systems, and you need to be tracking your systems on a weekly basis, but also tracking the market that you're trading as well, because that market is going to be that's going to be the telling factor. What's happening with your market conditions? So you don't really want to be led into a really poor performing system by the fact that you've missed a change in the market conditions, do you? You want to be on top of that. You want to be saying, right, well, if I'm trading this strategy here, I at least want to know that if I've got a system that's particularly got a long bias or whatever the case is, that I'm able to identify that. Now, this strategy here has got longs and shorts running, but you can see that it's trading a lot less on the short side, and I need to make sure when I'm trading strategies like this that I'm aware of how my system is correlated or how my system is constructed, so if there's a change in the conditions I can respond accordingly. So guys, let's have a quick look here at we'll just jump back in, we'll close that down for a second, and we'll go back to our results here just quickly. So if we go back to our portfolio tab, system management tab, again, F81 could definitely be. I've got it marked with a red tab, which means that it's under review anyway. B10 Gold is tracking nicely, $13,000 profit, max drawdown 10.2. So massive contrast between the two systems, isn't there? And this is what we're looking to see. If you've got the Eurobond at 5 and you've got the gold at 10.2, 77 trades, it's really just a case of subbing that out, isn't it? And we've got a better win rate. So it's really not hard once you start ranking your strategies to pick better systems that have got more to offer. And what do we know is happening with gold at the moment? What's one of the big things happening with gold, the gold market at the moment? Anybody? Anybody tracking gold? Okay, anybody tracking gold? Yeah, deflation, or a lot of volatility, obviously. So we've had a massive push from 1300 down to 12. We got below 1200 on gold. So gold's got a bit of volatility in there at the moment. So if we've had a system that's been running well, it's a breakout strategy. We need to keep track that the market conditions haven't changed too much. If they've gotten more volatile, that could be a benefit to our strategy. So if that's the case, it's likely that that system's going to continue to work really well. Not taking a lot of trades, but performing very well, 49%. So again, that's a system that we want to have in our portfolio. 13. We've got the S&P, which we know as a group, the S&P has been trending, has been in a beautiful uptrend. It's had some good volatility to the short side as well. This is running at 56%. The drawdown's very low for a system or for a market that's got such good volume, which is great for our emerging managers. So that volume is at a level where we want it to be. Overall profit, the average trade net profit there is sitting at 191. The profit, if we look at our portfolio profit to max drawdown, it's sitting at our second highest. So that's exactly what we're after. Our second highest. So that would definitely be a strategy that we would consider putting into, because again, good average trade net profit, good ratio of profit to max drawdown, tracking well, good volatility, 56% on the win rate. That's fantastic for a trend trading system. That's one that I think that was from Jason. And that's just continued to track really well. So that definitely features in our top 10. The other system that I wanted to put in there was B44 Eurobond. Why? What? I mean, obviously for the fact that the ratio of profit to max drawdown, that we've already spoken about that. But also to, what's the other advantage with trading the Eurobond? Yeah, it's less correlated to commodities. Also, too, it's a huge market. It's got great volume. It's got it really does well on the trend. So high volume. It's massive. And the great thing is that once you are trading the Eurobond and you start to get a feel for it, it really does track well. It tends to move well, and you'll find that it's not as choppy as some of these other markets. So we've got a number of systems running on the Eurobond that are doing really well. I would definitely, if you haven't explored it, definitely add it in, because it means that you've got a starting point. You've got a starting point for these systems. You can download, in the group, you can just go into one of the systems that the guys have created, download that, and have a look at the strategy and customize it to suit what you want to do. So, guys, that's a quick look at some of our top 10 strategies. I put in copper here because, actually, I'll just go through this. The two that I've got copper in here because it's a cycle trader, and its average trade net profit is $67. Why do you think I've got copper in there? Even though the profit is not huge, like you might think, well, he's got copper in there. The profit's $4,338. Why would I even consider having that in our top 10? Why would that get a position in our top 10? It's a very small drawdown. You've got to remember that some of the traders that we've got in our group are starting with less than 10k in their account. So if you've got the ability to pick a strategy up that has got a very, very low drawdown, and you're trading a 10k account, you've got 43% over that 8-9 month period. That's fantastic. If you're looking to put your track record together and looking to get on the emerging managers portfolio, if you swing, say for example, the Eurobond and copper together, you've got two really good strategies there, producing great profit, and you're batting over 100% for your return on investment for the year so far to date. 120 plus. So that is as far as performance. And again, we want to be careful not to be just trading one strategy, but sometimes with our traders, depending on the size of your portfolio, you're going to be limited to one strategy. So you want to pick something that at least has a very, very low drawdown, ideally. So guys, that's a quick review of the top 10. This is kind of part one of this overall presentation. I'm going to be doing the second part tonight, and I'll be going through another 10 strategies. So I'll be making that available in our Dropbox folder, so I'll just add that in for later on tonight so you can have a look.